this so you can sort of see me, not get chopped around. There you go. Got my tie-dye shirt on. So this is what I wanted to show you. The most money I've lost in my career is trying to pick a bottom or a top. Now, don't get me wrong. There are things that get overdone, and you can buy them after the first consolidation. So just keep that in mind. So I wanted to show you on at least how I try to spot uh, consolidations. So just give me a second while I look at something. Okay. Is the biggest thing that I've seen is consolidations are the way to go. And the reason is 80% of the of market moves are consolidations. So when you see this in the SPX, this is where it stumps you. It stumps you because of this. Everybody thinks it's a top. And with all these indecision, and then it breaks to the downside. Totally understand. Totally understand how you get to that. The problem is that it's all on how it works off an oversold condition, which you have there. So what I wanted to show you was this is all the time when I'm trading these suckers, I talk about oversold condition, how it works it off. So this is what I mean. I use on futures a 4-hour. And when you go to a 4-hour, you're going to see you're getting real overbought on a lot of different time frames. But you don't have a reversal yet. The point is that right here, number one, you had a little positive divergence on an hourly, which is when the MACD doesn't make a new low when this does. That's all fine. The thing is, you're starting to get overbought, and it's all about how it works off an oversold condition. Like here, you got oversold, you got back to overbought, and it did nothing. Now, I'm not sure what to do in here when the bonds are down 108. So just keep that in mind. But usually, tops form, it takes a while, even on a 4-hour chart. And then you wait to see how it works off an oversold condition. As you see, it's worked it off okay. So tops usually form after a period of consolidation. So, I mean, a period of schmutz like here. But the point is, theoretically, you don't know it's a top till it breaks up or down. And then you wait to see if it has a snapback rally, sort of like what you're seeing now. This is a real snapback rally, that's for sure. So just keep that in mind. So usually tops are formed by something. Is it high sentiment? Is it the bond market? And this top was because of the bond market. So when the bond market sold off, the NASDAQ stopped going up. But then it formed a top. And the top, the better trade was the consolidation pattern. So everybody wants to short on the way up. This looks a lot, by the way, like 1987 crash, where it refused to go down. Everybody gives up. You have one little panic sell-off. It comes back only to here, and then the market just falls apart. Just enough to get the bears giving up. But there are a couple of things to watch in here. Number one, when you see a top, you want to see it under the ATR trailing stop. That's the first thing you want to see is under the ATR trailing stop, which you're seeing. Then you want to see how it works off and oversold. And it worked it off pretty crappy. So a lot of this is like noise before the opening. That's not exactly fair. But the better trade is either short on this break or wait for a test of that. So that's the consolidation patterns I'm talking about. On the other hand, there's a consolidation pattern on the upside. Now, this is more, you would say, a reversal pattern, but within that, you had little bear flags. All in here, little bear flags. Just like here, you had a little bull flag. So that's what I'm talking about. You didn't have to pick on the way down. Boy, is that hard. Nope, you're picking on the way up. So darn right you missed the first 500 points. But that bull flag was good for 700 points. So that's why consolidations have always made me more money. So just keep that in mind. So what else am I going to do in here? Well, the first thing is I just want to identify these to you. So as you see, this was a tough one because it looked like a top. It didn't follow through, but it did get oversold at some support. And then it's how it works off the oversold condition. So far, it's worked it off great. So, I mean, that's what's happened so far. So it's worked it off, I guess, okay. The biggest tip off in here, if you want to see tops and you're trying to pick a top, is you want to look at corresponding indexes. So you can't really take the Dow because the Dow is like 30 stocks. You can take the ES. So the ES, as you see, is it going to reclaim there? So that's what everybody's watching. Now there's something else in here interesting, and that's this: the individual NASDAQ stocks. This year, there's just a study that the NASDAQ would be down for the year if it wasn't for 6 stocks. So you would think the NASDAQ, yeah, you got to have the rest catch up or these get nailed. Well, this is another tell, is the individual stocks. So if the individual stocks had topping patterns and it completely invalidates it, that's a big warning sign not to go pedal to the metal short. Like I said, you got to see how oversold conditions are worked off. So far, pretty well. So just, keep that in mind. So that's what I'm watching. Definitely look for a top. Is that a top? No. Usually when I see tops, it takes a period of consolidation. And all I mean by consolidation, a period of lack of movement, lack of momentum. Then some trend line can be drawn. Now, that can be on a 1 hour, 1 minute. And I'll show you a perfect example from yesterday. This is the QQQ yesterday. So if you tried to pick a top in the Qs yesterday, yeah, good luck. But look what happened on a 1 minute chart later in the day. Not here. You don't see anything here. Right here. There. So you got the lack of momentum and finally a break. Now, what was the first tip off? The first tip off was that it got under that line. That's the ATR trailing stop. That's not good enough. That's only one reason. But then that was a big tip off to watch it. We shorted it here on the break of that trend line. So that's tops. I mean, the tops take a while, and I like to have a defined trend line. So definitely a defined trend line. So, and that's how I watch those things. Now, how do you do the consolidations? Well, I did that chart patterns mastery thing. And the way I look at it is the consolidations are bull flags, bear flags, or Brecher ledges. A bear flag with a horizontal trend line, I just call a Brecher ledge, sort of made that up. So, but those are where you look for consolidation patterns, because the tighter the pattern, the tighter the stop. Like I said, at least 80% of patterns of patterns in every product are consolidation patterns. So that's the way I look at this. By the way, if I get close to the camera when I'm doing the live stream, that's because I'm on the edge of my seat finding ideas. So just keep that in mind. So what else am I watching in here? I'm watching little nooks and crannies of that. There's a little consolidation. That wasn't tight enough. And the first break, and that's another thing I want to go over. That's the ATR trailing stop. So usually on the way up, you get little oversold conditions over the ATR trailing stop. Now, you can use a moving average, whatever you want. I've just used this for years and years and years. But the first break on any time frame of the ATR trailing stop creates a oversold condition. Do not trust that. That's after a protracted move up. And as you see, that's exactly what happened. And this is exactly what we're talking about working off an oversold. If it worked it off by staying in a bear flag, heck yeah, that would be bearish. But that's not what happened. So, just keep that in mind. That's what I'm watching. So, no shorts. No shorts till proven otherwise. So just, keep that in mind. I don't see the shorts. And if I do, I just don't see them now. And later, with the bonds down 106, I'll look for topping patterns. And that could have been, but that's exactly what I said in the QQQ. It creates an oversold condition. It's how it works off the oversold. And that's how I play it. And I'm still scanning. And don't see it yet. Now, the first thing I'm going to watch for tip-offs of a top is going to be if there's a divergence between the advanced declines, which there was earlier, but then the advanced declines kicked in gear. So that's not there yet. So what else am I watching? Well, I'm watching the bond market, but today nobody cares. It will eventually, but it doesn't matter now. The key is consolidation patterns and just jumping on those. You're going to miss the beginning of the move, but you're going to have the direction known. So we can go in a million. I'm sure gold has the same thing. On the way up, big old move up. And then you take it hourly, and you're going to have things that work off an oversold condition and overbought condition, and they hold up like a champ. Now, they're not perfect, but there's one right there. There's a bull flag within an uptrend. So when you're in an uptrend, I look for bull flags on a shorter term perspective. And that's how I do it. So definitely tops all have to do with a loss of momentum. For it to stay down, you need to see the first sell-off and how it works off the oversold condition on a short-term chart. So if I'm doing daily for a topping formation, I'll go to an hourly and see how it works off something. And that's how I'll do it. And that's how we've been doing it. And I'm telling you, picking a top, because it takes time for the loss of momentum, you might have a lot of emotional energy of staying in it. The key for me is to wait for the break and the consolidation, because then you're not tying up your money. And 80% of things are consolidations. That way, your time value of money works in your favor. So that's how I'm looking at that. So the other thing I do in here is definitely I scan everything, whether it's stocks, whether it's bonds. When you see this, you just have to respect that it held, and some of the stocks within the group have broken up. The only problem with that is the advanced decline stinks. Every day it stunk. And then it comes down to, do you trust that the other stocks are going to pull down the NASDAQ, or do you trust that the NASDAQ 100 is finally going to kick in and get nailed? So the way I'm looking at it is some of these stocks, this is all messed up. The GDP was stronger today, so the bond market's down. The NASDAQ usually follows the bond market. As you see, it hasn't. So you'd think, well, then Caterpillar will come back. So is this a bottom? Well, it probably is now, and I'll show you on how I'm going to be able to look at it. So the theory is that this got it almost to the gap. How do you find a bottoming pattern? Well, you want to see that now. Work this off by doing that and staying up. Now, if you want to try to anticipate when the whole market's going bonkers, I totally understand why you'd want to do that. But definitely, they might play catch up. Now, if you want to anticipate when it's overbought, well, the first thing to do is see if it's overbought on an hourly. No way. So in here, I'm probably going to go and buy something for next week. The problem is it's overbought temporarily, in the last 15 minutes. That's it. So that's what I'm watching right now. So definitely, do I want to try to play it to the upside, betting on a catch-up trade? Sure. But it might not happen until it works off the temporary overbought. So it's overbought 5-minute, oversold hourly. To me, that means I can try to buy something for next week. So it doesn't mean it's perfect, but that's the kind of thing I like doing. And definitely, it's all about consolidation. So if this sucker works this off by just staying in this zone, heck yeah, that could have a massive rally. So, just that's what I'm watching. And it'll be interesting to watch this. Now, you might say, well, the whole market is pulling up Caterpillar. Maybe it is, but maybe these are going to play catch up. So I would watch this. Just close your eyes and watch this. If you want to bet, you do something like a spread. If you're trying to anticipate. Now, when a 5-point wide, I really don't like doing for more than 30% of the width, which means $1.50, and it's $1.96. That's a lot you're paying. That's a lot you're paying. So, I mean, that's the way I look at it. And while I'm looking down and up, I'm just looking at a lot of different ideas for trades. And that's what I'm doing at the moment. And that's what I'd watch in here. How it works off anything, whether it's a 5-minute, whether it's a 1-minute, just watch on how it works off things. So that's what I do. So whether it's a 1 minute, in fact, let me share this grid. So I'm going to show this grid and I'm going to show 6 grid. Now you don't need a squeeze on here. I can take all that off. And all I'm doing in here is I'm looking at multiple time frames. And let me just go 6 grid without squeeze. There. So you could take in here, let's say Caterpillar. And what I'm doing in here is looking at multiple time frames. So this could be a bottom, trying to pick bottoms or tops. But the whole idea is like this: daily, 4 hour, 1 hour, 15, 5, and 1. So let me share that because I think this is a cool grid. And all I'm doing is looking for how things are worked, overbought or oversold on 6 time frames. I look at all my stocks this way. And I'll answer that question. Like I said, I'm trying to look at stocks. I'm trying to look at all this. And if I miss your question, I'm sorry. So let me go and show this. This is a 6 grid. Now, just keep in mind, by the way, the first priority for me is the ATR trailing stop. Well, first priority is charts. The second is support and resistance. The third is the ATR trailing stop. And then I'll add all the moving averages in here. Now, for this, it's on Thinkorswim. So on TradingView, you go into here and you go to indicators. And it's either volatility stop. There's one of them. The other one is just put in ATR trail and it fills it in for you. There you go. So there's another one. And they're both in there. So they're free. I mean, if you it's free if you're in TradingView and pay the subscription. It's also free on Thinkorswim. So just keep that in mind in there. But just so you know, it's in there. And like I said, I'm trying to dual broadcast, and the free room is where I'm answering most of the chat questions. So keep that in mind. So definitely, whether it's in here or it's on the QQQ, it's all about if and how a consolidation pattern, how the overbought or oversold is worked off. And as you see right now, it's working it off pretty well. For now. The thing you're going to be watching now is, are there divergences? Yeah, the bonds are getting trashed and this is on its high. Usually when I see that, I look for a topping formation, but boy, do you not see one right now. So if I link these and put them on both sides, yeah, you're going to see the 15 is overbought. The hourly's overbought, but heck, you got the most way to lose money is to short when it's overbought or and buy when it's oversold. You got to wait for your triggers. So I just can't stress that enough. So nothing here. You could say trend line on an hourly. Sure, you could. So when it breaks the trend line, you probably have a consolidation pattern. There you go. You have that consolidation. So the whole idea is you can't fight that kind of trend. That's what the ATR trailing stop's all about. And the other question about moving averages, I use the moving averages everybody else uses on the street. So I do this. This is the most common. Everybody has a different version, and whatever works for you, great. But I use the 9 EMA, 20 simple, 50 simple, 200 simple. That's it. There you go. That's all I do. Everybody uses a different one. If they work for you, great. So let me go and put this, but that's a personal preference. I just try to do what everybody else is doing. Let me go and try to snag at that and share it for you. Now, I'll also show the ATR trailing stop settings if you'd like. Let me see if this works for you. So right here and here. And like I said, my triggers are a decisive break one way or the other. That's my triggers. I'm watching a lot of other things, but those are overall my triggers. So let's go into this. I'm going to go and post, share this file. So let me go and do this. File. There, that's your settings one. Then I'm going to go into the ATR trailing stop and I'm going to share that. And like I said, on the chart patterns mastery, this is just bonus to hear it out. I'm only looking at the questions on the free room. That's the way I'm going to have to do it. So I'm sorry about that. I'll be back on later. There. Now I'll put settings two. There. And like I said, the triggers are the break from a consolidation. That's all it is. No more, no less. So when I see this, the tighter the pattern, the tighter the stop. If I buy right there, darn right, the stop is going to be if it gets under that. So my trigger is when it breaks up after a lot of lines. That's the other mistake I see so many other sites on Twitter, that they think a trend line is one point of contact. Look at all these points of contact on the QQQ yesterday. Look at all those points of contact right there, there, and there. So the trigger is when it breaks. If it breaks here, you only have 2 points of contact. So that's your trigger. It's also you also have the ATR trailing stop has already been broken. So just keep that in mind. So let me sign off, not in here, but from the live streaming. I hope you enjoyed it. And I will